Yeah, I think it's really people coming to grips with the fact that they can't wait until the election to allocate. There's so much pent up positive demand for crypto and Bitcoin specifically in the market. So many long term trends pushing us forward. We have the Bitcoin ETFs. We have Larry Fink on TV calling it a major asset class. We have institutions moving in. But people sort of had in their mind that they could wait until after the election to get in. I think yesterday when Kamala Harris came out with some vaguely pro-crypto commentary in a policy position paper, that was enough to make people realize that they had to get in now, that they couldn't wait till the end. Our view at Bitwise is that crypto will end the year at new all-time highs, and it was just a question of when the rally would begin. It's possible the rally has already begun.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Bitwise CIO Matt Hougan shares his 2025 crypto outlook. He talks about Bitcoin ETF, U.S. elections, Solana, Ethereum, price predictions, and more.
Well, look, I think the market already realizes that a Trump presidency would be good for crypto. So that's clear. I think the question the market has is what would happen if Harris wins? Would that be neutral for crypto? Would it be positive for crypto? Or would it be strongly negative for crypto? I think what people learned from the fact that Harris at least mentioned crypto is that she recognizes that at least for a particular demographic, caring about crypto is something worth noting. So that maybe removes the worst outcome that people were considering. So at least we're getting to neutral, if not positive. Neutral is plenty for Bitcoin to rally. I think for altcoins, there are more questions. But for Bitcoin to do well over the next few years, neutral from Washington is perfectly fine. I think the very limited commentary we got out of the Harris campaign yesterday made neutral more likely. And I think that's what sort of unleashed the rally, removing that worst possible outcome from sort of the span of outcomes to consider. There is a really significant amount of money on the sidelines. You know, at Bitwise, what we do all day is speak to financial advisors and family offices and institutions about crypto. And they all had their eye on the election, wondering if crypto will get the all clear. Markets hate nothing worse than uncertainty. And I think for many people, the election represented uncertainty. And so they were sitting on the sidelines waiting. They realized that crypto is not going away. They realized that it's moving into the institutional sort of part of the world, but they thought they could wait and delay. I think if this rally continues, if we continue to see momentum and it trips up towards 70,000, I think it becomes a self-fulfilling prophecy. People realizing they have to get on the train before the election. They can't wait for the all clear. And that's normal. You often see, assets rallying before news. And I think that's a little bit what we might be seeing right here.
The total cryptocurrency market capitalization tipped on October 22, undoing all the gains made over the past few days. The sell-off may have resulted from investor fear of spillover effects from the stock market and a strong U.S. dollar, reducing traders' confidence in Federal Reserve rate cuts. The total crypto market capitalization has dropped by approximately 1.5% in the last 24 hours to reach $2.3 trillion. The drop in market cap includes losses from Bitcoin and Ethereum, which have fallen by around 1.6% and 2.8%, respectively. Today's rally mirrors the weakness witnessed in U.S. equities. The S&P 500 dropped from its new all-time high at 5,878.46, reached on October 17, and closed 0.18% down on October 21. This performance highlights the impact of the decline in the valuation of the largest companies listed on stock exchanges in the United States. The Dow Jones Index closed 344 points, or 0.8% lower, while the Nasdaq Composite Index pulled up 1.4% to close the day at 18,540.01. Nevertheless, market participants still have their focus on the Fed's decision following a two-day Federal Open Market Committee (FOMC) meetings scheduled for November 6 and November 7. The U.S. Central Bank is expected to continue cutting rates on November 7, but it may not be as aggressive as the 50 basis point cut it began with on September 18. According to data from CME Group's FedWatch tool, the odds of a 0.5% rate cut at the November 7 FOMC meeting have reduced to 0% at the time of writing, against an 89.9% expectation of a 0.25% rate cut and an 11% possibility of rates remaining unchanged.
I think it depends on what part of the industry you're talking about. Honestly, as I mentioned, I think with Bitcoin, neutral is fine. Bitcoin doesn't need Washington to thrive. It just needs Washington to get out of the way. That may be true with Ethereum as well. Ethereum maybe has sort of leapt the regulatory boundary and is now an institutional asset. As you move beyond Bitcoin and Ethereum into the altcoins, I think those are more sensitive to regulatory developments and the speed of regulatory clarity and the sort of quality of the regulatory clarity that we get. In other words, in a sort of mixed government environment where maybe you have a Republican Senate and a Democratic House and a Democrat in the White House, how quickly do we get regulatory clarity around altcoins? It could take a fair amount of time. So I do think in the altcoin space, it matters quite a bit what we see in November. For Bitcoin and even for Ethereum, a little bit less, but even for Ethereum, I think they both do well, and they're just waiting sort of to clear this hurdle to get it out of the way. Yeah, I think for many people, it's the safest and lowest cost way to access Bitcoin or Ethereum. You could buy it on an exchange like Coinbase, but you pay relatively high fees, and maybe it's not kept in 100% cold storage. If you're a larger investor, maybe you could do it your own on an SMA, etc. But for many people, buying an ETF and getting institutional custody and paying a fee of 20 basis points or 25 basis points, that's 0.2% per year. That's the kind of fee that the largest institutions in the world would pay to get institutional caliber custody, and you're getting that as a retail investor. Now, there is one important difference. It's not self-custody, right? So you're not owning the Bitcoin yourself. You're relying on an intermediary. You're not owning the Ethereum yourself. You can't use it to operate in the DeFi ecosystem. What we find is a lot of people do both. They have some Bitcoin that they keep in self-custody because they care about the original ethos of Bitcoin, or some Ethereum that they use to interact with the DeFi world. And then for their investment, they use these ETFs because they're getting institutional prices, even as a retail investor, and that's a pretty good deal. Both are great. What you don't want to be is sort of in between, paying high fees on a centralized exchange without cold storage. That's no man's land now. Either self-custody or own an ETF. Those are both good options.
Long traders, those betting on the crypto market's upside, I witnessed a total of $171.2 million worth of liquidations in the last 24 hours. In comparison, short traders suffered over $30 million in liquidations in the same period. Ethereum liquidations reached $58.8 million over the last 24 hours, with over $57 million worth of cumulative leveraged long positions liquidated on the day, according to CoinGlass data. The total liquidations across the wider crypto market stand at $201 million over the last 24 hours, with the tally increasing at the time of publication. When long positions are liquidated, traders who are betting on prices going up are forced to sell their positions, often at a loss. This increased selling pressure has driven the crypto market valuation lower today. Meanwhile, the open interest reduction signals a decrease in active futures contracts, indicating that traders are closing their positions and stepping back from the market. Nonetheless, funding rates of most top coins, including Bitcoin and Ethereum, are positive, indicating that traders still in the market are generally more bullish, as they are willing to pay more to maintain long positions. From a technical standpoint, total, the crypto market cap of all cryptocurrencies, trades inside a prevailing descending parallel channel, which has been in play since March 2024. The rally above $2.35 trillion on October 21 failed to break through the upper boundary of the falling channel at $2.36 trillion. A daily candlestick close below this level would signal a possible continuation of the correction, which could see bulls retreat to seek support from the channel's middle boundary at $2.06 trillion, as shown in the weekly chart below. Lower than that, total may drop toward the support line of the governing chart pattern at $1.89 trillion. Such a move would represent a 17% drop from the current level. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.